on my Tickety Talk and YouTube. So for those of you guys who's gonna watch clips of this on my TikTok or YouTube, make sure you like and comment and subscribe. Don't worry, they're not gonna get the full thing. The brokies don't get the full thing. Only the top tier students, aka you guys, get the full deal. All right, so what is liquidity sweep lesson? So tonight we're gonna look at the most manipulated market in the entire fucking global world. Okay. Um, and I'm pretty sure you guys can guess based on the chart that's in front of us. Can I just get a number three that you guys can see that in front of me? We're looking at the Ethereum USD chart. Can everyone just drop a number three in the chat? I just want to make sure we're all on the same page here. Good stuff, good stuff, good stuff. All right. So now that we got the confirmation, let's go right into it. So here we're looking at Ethereum, and as you guys can see visually, it has significantly pumped in the last couple of days, not just a few hours, but especially in the last few hours. We had a noticeable pump. Okay. I'm gonna teach you guys how to identify these pumps and corrections before the market manipulators do it because 99% of retail traders, which is you guys, will not make money crypto trading. And I'm being so conservative right now when I say 99% because truth to be told, I think it's higher than 99%. I think it's less than 0.1% of traders who actually make money profitably on crypto trading. Now, when I say crypto trading, I'm being very specific here and just talking about crypto. Overall, rest of the type of trading, I think, have a higher percentage in success. However, crypto in general is extremely manipulated. Why? Because the benefiter who is manipulating the market makes money when you guys lose money. Hence the reason we call you guys exit liquidity. Okay, we call you guys exit liquidity because you guys make the wealthier, and you're gonna just go broke trying to chase the dips, right? So without further ado, let's go and jump right in. Oh, let me turn on my video for my visual so I can post on my Tickety Talk and YouTube. Because it gets higher engagements when you have the video on. At least that's what I find. When you don't have the video, people don't click on it and view it. So there you go. Let me just tilt this a little bit. There we go. There we go. All right, much better. All right. So we're gonna look at the liquidation map first. So here, this is accessible to virtually anyone. You do not have to pay it. It's coinglass.com. You could even Google search CoinGlass Ethereum liquidation heat map, and this is the first result you will see. Okay. I like to look at 24 hours, and I also like to look at 12 hours. I like to look at 14 hours, depending on what type of trade I am looking to place. All right. So first and foremost, let's just rewind the clock a little bit. Let's just go to like 30 minutes because I like to trade them 1 hour, but I'm gonna transfer it to 30-minute only so that we can see the price movement more significantly. So let's just go ahead and reverse the time to today afternoon at 12 Eastern time. Okay, so here we're seeing Eastern time right here. Ethereum was trading at 31.79, and if we cross-reference what happened around 12 o'clock today, let's see what happened. So today, January 17th, yada yada. All right. 12 o'clock. Where's 12 o'clock? Damn, 12 o'clock is pretty far away. All right, so 12 o'clock. Okay, from 12 o'clock all the way going into 5 o'clock, there was barely any movement. Okay, there was barely any liquidation. So in these positions, I would not have traded. Why? Because the market's contracting and they're ranging. So contracting and ranging basically means it's not moving that much. And when you're trading crypto, especially crypto, ideally in a ranging market, you want to steer away from trading. Okay, there's contraction, ranging market, expansion, volatility. Okay. And this is a lot more noticeable in the previous technique that I've also taught in Bollinger Bands. You can see it more visually. All right, so that's just for your notes there. So contraction, ranging market, market's barely moving. Um, I'll probably have to elaborate just because some of the newbies market moving slowly. I'm just gonna have to spell it out for some of y'all. Volatility, market moving aggressively. All right, hopefully that is a lot more clear for some of you newbies just getting your toes wet. All right, so this is a very obvious question, but hopefully you guys all get the answer right. In the crypto market, should we trade in contraction or expansion? Type number 3 for contraction, type number 7 for expansion. Let's see if the chat gets it. Hopefully, every single one of you guys get the answer because if you're not correct, then I genuinely question your very well-being when it comes to trading. Everyone should. So, should we trade during ranging market or should we trade during volatility? So, ranging market number 3, volatility number 7. Ranging market, number 3. Volatility, number 7. You know what's funny? So Jen being an educator, she's very knowledgeable, and
Listen, I
she typed in
misunderstood what you said.
she typed in number 3. No, it's actually I'm glad you typed in number 3, to be honest with you. 'Cause
Okay.
I know for a fact you know the answer, but I'm
Mm-hmm.
actually glad you mistakenly typed number 3 because when you type number 3, Tiana and Rebecca also typed number 3 because she's just copying your answers. So that goes to show you guys truly don't get it. So everyone
I don't know if
that
you
typed
said
in
it
number
wrong the
7,
first time or I just understood it the second time. I'm like, wait, what?
everyone that typed number 7, you guys are correct. So with crypto market, you do not want to trade contraction. And the reason why is because with crypto market, every time you place a trade, especially with crypto, there's a lot of spread that goes into your trade, meaning almost every time you place a trade, you're gonna start your position in a negative. So in a ranging market, your position's already in a net loss. So if you're not able to gain those positions in a profitable manner efficiently, within the volatility range, you're not able to exit the market in a profitable range, right? And when you're contracting, when the market's contracting, then that means there's less room for that volatility that is required. So contraction, you're not going to make money. Expansion is more money making opportunity. However, I am not saying that you cannot make money in contraction market at all because you can still swing trade. If you have the ability to be patient and just hold your position, then you can still, in theory, with the right technique, exit the market in a profitable manner. Well, regardless, all types of crypto trading is significantly high risk, and obviously you can get wiped out of all your positions. So make sure you do your due diligence in your risk management and consult your whoever that's in charge of your financial situations. So that being said, let's just go ahead and go further into the market. So we're looking at not so much volatility here, not so much volatility. Oh, kind of missed it here. So let's just go back right here just before that pump. So at 4:30, all right, let's go back to the liquidation heat map. What actually happened here right around 4:30, we had, oh my goodness, this is extremely violent. So at 4:30, we had 20 million, we had 68 million, we had 73 million, we had 55 million. Okay. What that basically means is those positions, if the price reached, here, I'm gonna mark it down for you guys to understand. So we saw liquidation here, we saw liquidation here, and we saw liquidation here. Okay, roughly. Those prices are not extremely accurate, but I'm just giving you an example. So if the market bounced upwards, this would have resulted in approximately 400. So if these levels were reached, and mind you, you would have seen these levels on the liquidation heat map before it happened because the prices always show you. I'll show you how to look at it later. Okay. But if we were looking at the Ethereum chart when it was 4 o'clock, 4 to 4:30, you would have seen this pool of liquidation level. Okay. This entire area that I've pretty much jot up with the yellow lines, right? I'm gonna make it more obvious. So this is like just bloodbath right here. Bloodbath. Okay. When I say bloodbath, I'm talking about for all the people that are in leverage short position, if the market were to be pushed to $3,250, 32.53, 32.65, first we would have seen about $25 million liquidation. Then we would have seen $30 million. Then we would have seen 40. Then we saw $70 million. One of these positions was $70 million in liquidation in total net loss. And mind you, this is just liquidation level based on Binance. Okay, Binance is the world's largest exchange. However, they're not the entire liquidation. Meaning there's other methods where we could somehow look and calculate from other exchanges on the liquidations. So just Binance alone, ladies and gentlemen, we had $400 million liquidation in these prices if the market hits those price ranges. So what does that tell us? So let's go back in the time right now. Let's just pretend right now. So right now it's 9:37 p.m., right? January 13th. Let's just pretend for a moment that it's 4 o'clock right now. Okay. So right now it's 4 o'clock and this is the price we see. And we flip to the liquidation chart and we're seeing $400 million in liquidation, which is abnormally humongous. That is not normal amount of liquidation pool. Okay. Just for reference, guys, this is not normal amount. This is abnormally large. Okay. So when there's 400 approximate million in net loss liquidation zone, what do you think Binance or any market maker is going to do? Because remember, if the price hits those price range, that money, that $400 million people lost collectively, goes into the pocket of Binance. They keep that money 100%. It's like going to the casino and you buy in for $10,000 at a blackjack table and you lose the entire 10K. What happens to that 10K? Who gets to keep the 10K that you just lost at the casino? Can someone answer in chat? What happens if you go to the casino right now and you bought in for $10,000, you're playing blackjack or you're playing slots or whatever, you lost the entire amount, okay? Who keeps that money? Who keeps that money? It's pretty obvious. Pretty obvious. Who keeps that money? Casino takes the money, right? Yes, Derek. House keeps the money. So in this scenario, if the market completely pumps and liquidates $400 million, who is the house here? Who is the house? Who's the owner of the exchange? What platform are these people trading on right now that we're talking about? What platform? It's pretty obvious, right? Binance keeps $400 million in net loss. They get to keep that in net profit. So when $400 million loses, Binance profits $400 million. Every single penny of it, with no exception. And I don't even think they're paying taxes, to be honest with you. I don't think they were paying taxes because most likely they're incorporated overseas and they have. Remember, you can't tax the ultra wealthy. Once we're in the $1 billion range, right? It's impossible to tax the wealthy because they're using debt to make more money and they're using debt to refinance. They're using debt to buy more assets. So when you are using debt, you can't be taxed because you're leveraging debt to get wealthier. And this is why when the interest rate goes down, when consumer price index happens, when Jerome Powell's speech happens, and and the Feds say we're cutting interest rate, this is why the entire fucking market pumps because then these global exchanges, right, and these global enterprises make billions, if not trillions of dollars collectively. And that is why everything pumps because the market's able to make more money because the company is able to make money. It'll increase the stock prices. It'll increase, Facebook stocks, Amazon stocks, Nvidia stocks, Tesla stocks, Amazon stocks. Almost any tech stocks is going to go up. Well, tech stock first, and then probably the graphic cards because graphic cards and cryptos are heavily correlated, right? You guys need to understand these fundamentals. But to make it very simple, market maker is most likely going to incentivize from the market pushing up. So this is pretty obvious, but I need everybody to answer and lock in. Let's say 4:30 right now. You see this pool of $400 million liquidation. What should we do? I need everybody to type in general chat. What the fuck are we doing, chat? What are we doing? Everybody answer. There's a couple of right answers, just so you know. It's not there's not just one right answer, just for reference. There's multiple answers you guys can give right now, and I will accept it. There's only one wrong answer. There's only one wrong answer. So let's see if you guys were able to get this question correctly. So 4:30 right now, okay? You listen to Ray because you're a good student, you're a smart trader. You listen to Ray and you listen to my teachings and you're locked the fuck in 4:30 looking at the chart, right? Um, I don't care who's calling you. I don't care if Beyonce's calling you. I don't care if fucking Jay-Z's calling you. I don't care if your favorite crush is calling you. I don't care if you're on a date. You see $400 million liquidation above the market right now. What the fuck are we doing, chat? I need everybody to answer this. There's one, two, three, four, five, six, seven, eight, nine people in this call. Need every one of you guys to answer what are we doing in this call. So everyone that said buy stop, you're correct. Everyone that says you would place a buy, you're correct. Um, Jen, I'll be completely honest with you. If this is gold or Forex, I would trade the pullbacks. However, during liquidation
It's
this high,
crypto, right?
I
So
would
it's
not
different.
I would not trade those pullbacks. And I'm not trying to like correct you or trying to like make myself look like more smarter than you, but you don't focus on crypto trading.
I do not.
Yeah, so it's understandable why you got that fundamental because that fundamental concept works and applies in every other market. However, with crypto, because it's heavily manipulated, when the liquidation happens and it starts happening, it's just gonna have a avalanche effect. So when the first level, well, I'll give you an example, okay? When the first level of the liquidation happens, it's gonna create an avalanche like domino effect, and it's gonna hit the level two, and then it's gonna hit level three, and then it's gonna hit level four until there's no more liquidity left. That's what happens. That's why you shouldn't trade the pullback. Because what happens is, let's say you took the buy position, made profit, and you took profit around the first liquidation, and you try to sell, right? You're gonna lose so much fucking money. You're gonna blow your entire fucking account if this gets.
No, that's what I mean. Like
If this
grab the
keeps
whole
going.
liquidity, every liquidity that you see on
So
that coin.
what I would do I would just, if anything, I would reassess the market and I would reassess the heat map. And if I still see lots of liquidation level above, I would take the trade. Mind you, even if you do follow these techniques, there's still a possibility you lose a trade. That's why you need to place stop losses and place your trades with psychological and risk management um, readiness. So Derek said he looked at the map. The cumulative liquidation much larger below. Is it because yesterday's CPI data? So that is possible, but I want you to understand something. It doesn't matter if there's larger pull at the bottom. That literally does not fucking matter. If the price, the current existing price, is pulling closer to the liquidation zone that is closer to. So I want you to understand that liquidation level is it acts like a magnet. Okay. So if the current price is closer to the liquidation level above rather than the bottom, contrary to the bottom, and if the liquidation level is relatively similar, it's always going to go towards the one that's closer because it acts like a magnet. So I need you to write this down in case you forget and you fuck yourself over and lose a lot of money. Okay. So these liquidation levels acts like a complete magnet. Okay. And then normally under regular circumstance, what actually does happen is after it hits the liquidation level, it will retrace and pull back. Okay. In that scenario, Jen would be correct, and you can trade those pullbacks and make fuck ton of money from the crashes or correction or so on and so forth. However, if that liquidation event already occurred, but there's significant more liquidation, because I'm gonna explain something to you, okay? So that you guys understand. So let's say the price went to let's say the price went to 32.42, okay? 32.42 and it liquidated, let's say $30 million, okay? What do you think 99.9% of retail traders are going to do once we broke out of this recent resistance level from a TA standpoint? Because remember, people love fucking technical analysis. People love TA, okay? And I'll be honest with you, they're fucking idiots, okay? But I'm not here to judge. I'm here to make you guys better traders. I'm not gonna judge on the fucking idiot traders. I used to be one of those, right? So this is the resistance level right here, right? Because we've tested 32.20 multiple times. Okay. That is the primary local resistance. So what people are gonna think is that, oh, we broke out of resistance, hit this, now that's a new resistance. Now we had a run, okay? Now we're gonna see a correction. That's what some idiot traders are gonna think because some traders, remember, some traders only know TA. They don't know fundamental. They don't know liquidation heat map. They don't know they don't understand the news, right? So a lot of traders, they're gonna do this shit. They're gonna be like, "Ooh, ooh, goes up, it goes down." That's what they're gonna think. Okay. This is what a lot of like 99% of traders will do. They're gonna draw some bullshit fucking chart like this and be like, all right, guys, so it's gonna go up, it's gonna hit take profit, and we're gonna short, we're gonna hit take profit, and then we're gonna have another impulse and take profit. No, that's not how it works, buddy. That is not how it works with crypto, especially when there's significant level of liquidation. So again, with that mindset, I need you guys to type in general chat. What do you think 99.9% of traders will do after the price hits 32.42? Okay. Let's say they even made money on this buy. Okay. So 32.42 hits. What do you think most people are going to do? Let's see if you guys can get this answer. What do you think majority of people are going to do? Let's see if you guys can get this. That is that is correct. So most people are going to place a sell. So it's just called psychological sell, and also they're using technical analysis. Before I shit on those guys, let me just be very clear. From a TA standpoint, technical analysis standpoint, the correct thing to do would be to sell here. Okay. And that's basically on technical analysis. But we as crypto traders know that when you hit this liquidation level and we cross-reference with this thick level of liquidation, what's going to happen is if you place a sell, you're going to get wiped out of your position. If you have a stop loss, it's going to hit your stop loss. If you don't have a stop loss, you might get margined out. And that is not what we want. Okay. So because of all those people placing sells, that's why the pool, Derek, you asked earlier, why didn't the market go down when there's pool of liquidation below? The number one reason is because once that first level of liquidation hit, people kept countering it. That is a number one reason. Okay? So when people keep countering it, guess what the market makers are gonna do? Do you think they're gonna be like, oh, look, bunch of fucking idiots placing sells. Let's reward them and let's drop the market so they all make money. Do you think that's what CZ is going to do? Shit, no, my video better not get fucking taken down because I'm saying some controversial shit. It's like I'm basically exposing the market right now. So I hope I don't get fucking flagged and taken down. Watch my YouTube video is gonna get taken down. If I post this clip, they're gonna be like, fuck, he's got the insiders. We need
Just
to
put a disclaimer at the end.
no, YouTube automation is automatic. The algorithm is gonna detect it. So, well,
Oof.
YouTube, if you guys want to flag me and kick me out, then so be it. At least my students are gonna be rich. So, if everybody collectively kept placing cells, okay, like 99.9% of human beings, you guys got it right. So let's say 99.9% of human beings that are trading right now in crypto keep placing cells. I need every one of you guys to answer in chat. What the fuck do you think is gonna happen? Need everybody to answer this question right now. What is gonna happen to the market? I want you guys to tell me what's gonna happen to the liquidity heat map. And I also want you to tell me what you're gonna see in the market. I want you guys to explain to me what do you think will happen? Everybody need to answer. Kayla, Serena, Rebecca, Derek, Tiana, John, Nate, Sir, what you guys all need to answer. Guys, every one of you need to answer. What do you think will happen to the market if everybody are being fucking idiots and they keep selling and selling and selling? They're countering it because, oh, I lost my trade here. I lost $50, so now I need to double my position and make my money back. What do you think like these people are thinking? Because remember, if somebody had a sell at this resistance level and they got wiped out, most people are gonna get emotional and they're gonna be like, I need to counter this because it is bound to drop. It is bound to drop. Now, from a technical standpoint, they're correct. Because why? Historically, in the recent turn of events, we have not reached this price anytime recently. We have not seen 3,200 plus in like weeks, months, right? So, because everyone's a fucking idiot, right? We can be the few smart ones and trade like the institution and take this entire liquidation zone. Okay, we can take that entire liquidation zone and be like institution. We can literally take everybody's money. Okay, I'm sorry, but it is what it is. Either you're with us or against us, right? Or rather, either we joined them or we're cooked. So I say we joined them, right? We joined Binance and the market manipulation bullshit. And we make the money with these guys. Why are we gonna give them our money when we can join the manipulation, right? So we can collect all this liquidation, right? We could just keep placing buys and fucking catch all these liquidation. People are getting liquidated, right? Right now, price is at 33.21. We can go look at the liquidation right now, right? Let's look at 12 hours because it's a lot more tighter time frame. So right now we're at 3,300. I'm not gonna lie, right now based on my analysis, we're probably gonna touch this. But again, that's not to say out of nowhere you're not gonna see pool of liquidation right here, right? For now, at this exact moment, there's more liquidation below at 3,300. However, that can change very quickly. If liquidations start piling up here, because remember, psychologically, everyone's gonna keep trying to sell, 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 sell. So what do you guys think will happen, right? So yes, we see a lot of liquidation. Okay, we see hundreds of millions of dollars at 3,300. However, if everybody starts selling, 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 what do you think will happen? I need somebody to tell me what do you think will happen here? What do you think will happen to here? What do you think happened to the liquidation heat map? It's not gonna look like this, I'll tell you that much. What do you think is gonna happen? Can everybody answer in general chat? What do you guys think we will see? What differences are we gonna see in the liquidation heat map if everybody starts selling right now? They're placing shorts. Need everybody to lock in and tell me the answer. What will happen if everyone collectively starts selling again? And you guys want to know something crazy? Market manipulators work exactly like the casinos because have you guys ever been to a casino and you start like making a lot of wins? Like you start winning on slot, you start winning on blackjack, you start winning on baccarat. Did you guys know that some casinos try to rig the game so that you guys actually win your first time you visit? Or when you first come to the casino, they sometimes try to rig it to make you win. Not all casinos, but some casinos, they'll try to make you win. You
Yeah,
know
so you
why
can
they do
spend more
that?
money.
They do that because then you have that instant gratification, right? These markets are no different. They'll try to make you win or think that you're gonna win, right? So let's say the current price is at 33.21. You're gonna place a sell because that's what 99% of people are gonna do right now. You're gonna be in a decent amount of profit when this drops to 33.18. But then everyone's gonna start selling, right? Then we're gonna see pool of liquidation here, right? And then at that point, what do you think's gonna happen? If this entire liquidation gets moved here and then we see another like yellow and green bar right above the current market price, what the fuck do you think will happen, chat? Like, I need everybody to answer in general chat. What do you think will happen if we start seeing a bunch of idiots selling again? We're not gonna touch these prices. We're gonna go right above 3,400. It's gonna liquidate everything at the top, right? That being said, I'm not saying you can't make money. Right now, based on the heat map itself and the TA, yes, we're gonna probably hit like low 3,300 based on this map. However, this can change any second, is what I'm trying to warn you guys. This, if we start getting pool of liquidation here, you're gonna get wiped out. But most people don't even use a liquidation heat map. But later on, I do believe that this heat map is going to be useless. But for now, it's still working very well because we're able to identify and make profit using those heat map. But you think Binance doesn't know that some people know this shit? Eventually, if Binance understands that people are using the heat map, right? If too many of us are using it, then guess what? They're gonna start using the heat map to fuck us over. So we can't do that long term. Right now, it still works. So, moreover, this is how you identify liquidation level and trade profitably. I'm gonna end the recording so we can proceed with